Okie dokie, traders, what's going on? Jamie Saettele here. It is November 22nd, day before Thanksgiving here in the U.S. And let's get to our midweek strategy webinar. So first, let me know that you can hear and that you can see. Test, test, test. Can you guys hear me? Can you, or not? Yes, you can hear me. Okay. Super. Chris, Thomas, Iman, what's going on, everybody? I'm sure you're all missing Mike this week. He is obviously posting things, but not doing the webinars this week, visiting his father. And that's always important family time. So what we have here is this analog, DXY, dollar analog. I think we are entering one of the periods. Frankly, I haven't seen something like this in a long time where everything is really coming together in terms of all the evidence is kind of coming together to say it's time to really kind of load the boat and be aggressive on a short dollar position. And I think the best way to do it actually might actually be dollar Swiss. Dollar yen, obviously, would like to get back involved with that. Kind of kicking myself that I didn't go in on for a short at 112.60, and I'll tell you why here in a little bit. But the Swiss franc might even do better. So first of all, we've been following this for a while. Uncanny that it's just been this accurate. And the period that we're comparing to is back here. This is 1994, and essentially we are, I think, right about here, right? So what this tells me is that we're going to go lower, sharply lower, really through December and January, okay? And then again, maybe potentially March, but really the easy part of it's probably, probably in January, to be quite honest with you. If we look at the daily version of it, here's the daily version, and it's been pretty much on point here as far as the top, looking for the top, and early to mid-November, I guess, and a down up sequence. So yeah, it's bearish with any bounces along the way should be looked at as short opportunities, in my opinion. So we've got that going for us, which is nice. And this lines up with so many things, as I was saying. The seasonals, okay. There are Swiss franc seasonals, which actually have been pretty good this year, as far as calling for weakness in March, right? The bounce was a little early as far as the seasonal aspects are concerned, but we also turned down a little earlier, right? So we are now entering a very bearish period for the dollar against the Swiss franc in particular, right? The same can be said, of course, for euro, but on the opposite side, right? We are entering the very bullish period here. Not a surprise that Swiss franc, euro, same thing almost. DXY entering a very bearish period there, right? So obviously we've got FOMC later today, and then there is ECB tomorrow, so it might be a little more risk with euro. But here's another reason why I love playing this through Swiss franc, maybe exclusively for the moment, and maybe forgetting about euro. There's a few things here. We have, of course, the COT data, right? And I published this chart, I believe, in the update a couple days ago. And what you're looking at here is the biggest net speculative short position in the Swiss franc which would mean they're long dollar Swiss, right? Since May of 2013, right here, which was obviously a pretty big low. Okay, and then before that, you've got to go back to June of 2012, which was an interim low before you got the bigger low. Either way, risk is skewed to the upside in Swiss, downside in dollar Swiss. While we're on the COT charts, let's just look at Japanese yen. Vladimir saying DAX and dollar CAD, you got it. We will go to both of those. But dollar yen, similar, probably even a little more stretched than Swiss franc. No doubt that, you know, this data is as of last Tuesday, so it's probably going to be a little, it's probably not quite this right now, right? It's probably moderate a little bit. We'll get that data in a couple days, but you've got the most extreme positioning here with the specs being on the you know, basically on the carry side, short yen, long dollar yen since December 2013, right? And that, of course, was a big time low here. And then before that, you've got to go all the way back to the major low in 2007 in yen, right? And that was actually kind of the onset of the early stages of the financial crisis. So that is interesting to note. Finally, while we have you here with COT, crude oil is especially interesting. I know it's up good today, but you've got a record speculative long position in crude oil, actually. So we've got record spec longs, and not only that, but we have the most extreme 4-week buying by speculators. So I'm looking for crude to kind of roll over here relatively soon. And maybe, you know, I'm broadly bullish crude. This is, you know, from a longer term perspective, I think we could get up to even I think we could get up to 85 or 90 bucks at some point in 2018, but you probably need to reset this positioning a little bit before that can happen, right? So we will look at a crude chart here in a bit too. All right, so we've got that. All this, you know, as far as the Swiss franc and euro, dollar, you know, the analog, the COT, the seasonals are all in alignment, right? So let's go then to our next piece of the puzzle, which was posted last night. The dollar against the Swedish krona. You know, this is often looked at as kind of a bellwether, if you will, for the dollar, right? To kind of say as it's kind of looked at as a leader. In this case, it was actually lagging because if I put over DXY, right, DXY actually topped over here, and of course we actually had the you know, the top yesterday in the dollar against the Swedish krona. So that has been a little off kilter, but the idea remains the same, and that the dollar's on the back foot, and that this reversal here finally, I think, is what we needed to see as a final piece of the puzzle before the dollar's really allowed to take a dive. And you do see divergences in this at turns. You know, it happened the opposite in December last year. So just about a year ago, you know, dollar SEK actually topped up, and on December 16th, it was the day after the FOMC, December Fed, which they raised rates. And if you remember, we went sideways more or less and then popped open to a new high in DXY, but not dollar SEK in January, first day of January last year. So kind of the opposite situation right here as we had just about a year ago. All right. So yeah, this again, also very dollar bearish in my opinion here. So we've got all the info saying we should just short the hell out of the dollar, and I think that Swiss franc's the best way to do it. So let's just go to a Swiss franc chart first and just kind of plot out, you know, where we want to do this. All right. So we're already breaking down. I had an order at 99.70. Obviously, that's probably not going to get triggered at this point. So what I'm going to be doing, I will put an order in before before FOMC. I'll tweet it out. Don't worry. You know, have it out for the official order or whatever. But I'm looking at basically putting up a short at 98.70. So that's just the low from 11.17. Right. Kind of looking at this form, had some you know, congestion over here. Weekly opens 98.78, of course, and the stop should be safe if this is going to work for now. Up at 99.50, 99.46 is of course the high from yesterday. So, you know, FOMC later, maybe we get something of a bounce in the dollar on initial reaction, or you know, whatever. Just take advantage of some volatility that's going to send the market going in both directions. And yeah, look to get in a short position. I'll probably go with a trade size of 2 on that because, one, I want to have a piece for a kind of a bigger trade, and the other piece of the trade will just simply be targeting, you know, this 97.70 area that we've been talking about, top side of the trend line here, right? And you got two legs down, 97.55, right? But let's take a step back, because I do think this could be something that really, you know, I mean, really makes a difference. So if we look at this, you've got this boxed, so to speak, you know, rectangular pattern going on, right? I mean, it's clear as day. Real clean levels, right? 2 tops, right? November, December, 2 lows, May 2016, right? August, September. In other words, it's a very clear, you know, horizontal rectangle, just a geometric pattern that's oftentimes the best ones to trade from in a market. So if we're, you know, based on the COT, based on the seasonals and all the information presented to this point, one would, you know, have to kind of think that the ultimate resolution of this is going to be lower, especially with the failure on this trend line. What a beauty it is, right? So you've also got this here, right? Horizontal levels here. So just, I mean, just great, great levels. Okay, you know, here, okay, this stuff over here, lots of really nice, beautiful horizontal resistance to look at. So where would your target be if we were to break down through this rectangular shape? And it could be as early as January. You could be looking at 85.60, which would actually be pretty close to where you settled after the SNB lifted their floor on Euro Swiss, right? We closed that week actually at 85.92. So let's just call it 86. That's a huge move, folks, from here, from 98.30. We're talking massive, massive move, okay? Obviously, before then, you'd be looking at swing lows, say, from over here in May of 2015 at 90.71. So with all the information we've got, you know, I'm not keen on just putting on a trade size of 1 and taking a 100 pip gain, right? Let's see if we can ride something and take a, you know, catch 1,000 pips, right? These opportunities don't come along too often, okay? And who cares if we're totally wrong, because the stop will be relatively tight anyway. So, and that's kind of the attitude you got to take, I think, when you're trading as well. Is you can't worry about being wrong when you get into your position, because if you act like that, you're never gonna press it when it's there. All right, so there we have dollar Swiss. I just love this trade. I love everything about it. I love the setup. I love the background. You know, whatever. I just love it. Okay. dollar Swiss. Let's go to, oh, euro Swiss as well, which where did we get crude popping? They're gonna try to break crude out, take out every stop they can, and hit that 200-week average. So euro Swiss, this is also why, as mentioned last night, why I think that Swiss is a better trade than euro here. I mean, you've got just clean as day slope. Okay. I'd call this an ending diagonal, 1, 2, 3, 4, 5. You've got the divergence noted here. And again, if you want to check to see if your divergence is for real or if it's BS, simply put on closing prices, because divergence, RSI, does not know what your high and low for the bar is. It only knows where the closes are. And in this case, you did have a higher close, so it satisfies divergence. So you had divergence, you had a J spike here on the 17th, and we're starting to roll over. And the first place I would look for this to go would probably be 1390, just because that's the parallel. It's a swing low from October, actually the October low right here. Always a good spot, but of course there's potential for something much deeper, because this does look like a completed 5-wave advance from 106 and change, which is from February, right? You got a 1, 2, 3, 4, 5, looking a lot lower. Okay, so that's the story on Euro Swiss, Swiss franc in particular. I was wondering too, what if Swiss yen is actually a place to look at. I wouldn't trade this. I'm just looking at it from the standpoint of which might be better, short dollar Swiss or short dollar yen. I still, I can't say here. This to me does look like a 5 up, 1, 2, 3, 4, 5. So I'm thinking naturally A, B, C lower, right? But you could just be trading in a range too, okay? And you do have a 1, 2, 3, 4, 5 here, so you could get a pop and get outperformance in Swiss here in the near term. The dollar is really starting to take it on the chin here as we head into the European close. Again, I wouldn't worry too much. I'm looking at operating on FOMC. Okay, so again, Swiss franc. The point of today's webinar is to go short dollar Swiss, basically. All right, let's move on to euro real quick, because even though we've got kind of a bullish bias on Swiss, even against euro could still be a good trade. We had been looking initially, I guess, kind of screwed this one up. Initially, we had thought that 17.15 or so would actually be support, and we hit that yesterday at 17.12. So unfortunately, tried to get a little too cute and looking for a bigger correction, maybe down to 16.70, which is the 618. Now, I guess that's still a possibility. You do have ECB tomorrow. However, going into this, I kind of expect you probably get support if you get a dip in the 1760 to 1770 range, which is actually where we were looking for resistance on the latest note last night. So, don't be too cute with it, I guess. I still think Swiss franc's the better trade. However, those that prefer to trade in euro, you've got what could be a completed 1, 2, and looking a good deal higher from here in euro, okay? Two legs up at 120.20, 618, 22.10. if I'm looking at the daily here, here's the daily, had the right parallels, I guess didn't trust it enough. Yesterday's high is 1757. Again, that might be a place for an order with a stop below yesterday's low of 1712, because even if, you know, even with ECB tomorrow, you still would be cracking this low, which I probably don't really want to see happen at this point. So targets on the upside are the gap at 1946, and then eventually two legs up / daily reversal resistance at 2010.34, with, of course, the bigger picture move being for this fifth wave to carry higher, right? Remember, 1, 2, 3, 4, looking higher in 5. We've been pretty consistent on that as far as calling for, you know, everything from this high in September really being just a fourth wave, right? And your targets on this are probably going to be extensions of the fourth wave. So just take the width of it, extend the 1618 and even the 200%. In other words, 200% is just the width of it plus that distance, and you get 2426 and 2632. The lower level at 2426 is going to be in line, it looks like, with a parallel up here, and it is, yes. You also would have at that level, now I thought you got that high up there, but you didn't. That's okay. So bottom line, want to be on the long side in euro. It's essentially short side in dollar, right? Okay. British pound. You know, in line, I guess, with the simply being a bear on the dollar. I'd be looking towards higher levels, but this is not nearly as clean or clear to me as the Swiss franc at this point. So, you know, if you get a drop, 20-day average, follow it. At times, it's been pretty good this year. And that would put you basically 131.65.70. That would be maybe tomorrow at some point. Obviously Thanksgiving, I'm not going to be tweeting anything out on Thanksgiving. We'll be hanging with the fam, but that would be an area to watch for support if you did get a drop, okay? But cable, to me, not especially clear at this point. I know Mike put some stuff up with cable. Excuse me, put some stuff up with cable last night, some cable charts. Again, I want to stick with what seems to be making the most sense to me at this point, and that does appear to be, or that doesn't appear to be, it is dollar, Swiss franc, and even Japanese yen to that point. So with that, let's go to Japanese yen. I will say that here's the pound seasonals. They are pretty clean. And that we are in a bullish period now. That bullish period actually tends to go just through the first week of December, okay, and then it starts to tail off again, and you start to get bullish in cable again, not till March, right? So cable tends to be an underperformer. Still have a fairly crowded COT position with cable, so it's one that, again, I'm not in a hurry to you know, go balls to the wall long on pound dollar. I think there's better places to be against the dollar. All right, Japanese yen. Well, you take 200 plus pips on a short, you think you're all that, and a bag of chips, and then you don't get back into the trade, and now we have, holy crap, what did I just do? Hold on. Hold on for a second here, I'm sorry. Okay, and now we have basically dollar yen back about 40 pips below where we got out. All right, so we will start with a daily, a broader view here. That's the Canadian dollar. All right, so dollar yen is cracking or trying to crack major support. Okay, this is significant, folks. I would say that this, if we can end the day somewhere down here, you're probably talking about getting, you know, easily getting 110.15, which is the 618. Okay, of the rally from September, if not something much more sinister on the downside, considering that COT position that we noted, right? You know, the logic slash reasoning for bailing on the short when we did, or at that 1190 figure, was simply there's so much down here. So I was looking for a correction, and we got one. It just only lasted a day. I was thinking that you would get a little more than that, right, and get a definable three-wave rally. Otherwise, I wouldn't have gotten out of the trade. But that's all right. Let's look and see where, you know, the path, I think, is lower, right, against the dollar, and with yen and Swiss maybe being the big ones to be involved in. So where might we want to get back in, right? First, again, targets, I'm thinking that you're probably going for that 10-15 area as a first target. There is stuff at 111, and you do have a gap at 110.80. Get rid of that. We really don't need that. Okay, you do have a gap at 110.82, and you've got all the stuff here. So we'll put the gap there. Okay, gap gold. Gap 110.80, 618, 110.15. Those would be, you know, the levels I'd look at, but I'd, you know, just get a little more aggressive and look at the lower level at 110.15 again, simply because of the, you know, the crowded positioning and just the overwhelming amount of bearish evidence that we do have for the Japanese, or for the dollar. So let's look then at where we, you know, should try to get back into this trade if we do get some consolidation slash bounce, what have you. So I'm pissed at myself for not getting back into this at 112.65 or so, 112.60, because that was the high volume level on the drop on 11.15, and then we got the bounce, and we held where we should, or should have, and we dropped, and we bounced right back into this level and didn't go back into it. Stupid, all right? If I show you the volume levels here, you can just see how great that actually was. There's the volume level. See that red low, right? Huge. Came down, hit it during Asia nonetheless 2 days ago, and didn't take it back in. So the futures chart is actually cleaner on the the slope. And if you just put a line across, you know, basically the high from the 19th, that would be, you know, Monday, Sunday night was the low, right? Dollar yen high in yen. I'd be looking at this parallel on futures. So let's simply look at that from a spot perspective. We're essentially talking about basically 11, you know, this level right here. We're looking at the low, okay? So again, it's not as clean, but this is the median line, which was support back here, right? And we could now be playing for that zoom and retest trade idea that we had talked about last week, right? So you can see here, came below, didn't hold, went to 65, didn't get back in. Now we've cracked and we're trading at the lowest in September. So this to me is where you would want to get back in, or at least keep an order. And that's how I'm going to approach this. Yeah, so Iman asking, if we got to bounce higher in dollar yen during FOMC, which level would you advise a short exposure? So it would be the median line. So FOMC would be, to be an exact level, it'd be 111.95, okay? Right here. I'll make this a red median line to convey that it is a level I would be wanting to short and simply follow this slope lower. Now again, on the futures, it is a little different. It's cleaner for whatever reason. The slope is. It's cleaner, so and it's a little more. It's a bit more bullish. Let's see if we can look at that and compare it. See why that would be. All right. Okay, so here is dollar yen, right? We're going to compare yen futures. Okay, we got yen futures on the bottom, right? So when I draw the fork, just a regular fork on yen futures, I get that, right? Which is going to give you a target pretty close to that gap that we were talking about. Okay, up here. When I look at spot, you don't get that clean slope that you have on the futures. Actually, you do. You just have to move it over, I guess. Okay, hold on. Well, this is weird because when you draw it, hold on here. Give me some moments here. Give me some moments. All right, draw that in. Actually, I guess we could look at it from this perspective. It would be the same thing though, as saying it didn't look as clean to me before because it's cut so much through this, and you don't touch any of this stuff over here. It's probably something a little more like that though. Same idea, folks. Okay. Want to be selling back into 111.90. Okay. Targeting that 110.60, 110.70 area as the next spot, with of course potential for something a little more drastic. But you know, dollar yen when it heads lower, you do tend to get some pretty big bounces along the way, right? I mean, even the downtrends that you had back in July, you know, there's some pretty big moves on the upside. So it's almost like try to sell the scary moves on, you know, that make you try to change your, that make you try to change your mind. And that's kind of how you want to look at it. But yeah, dollar Swiss, dollar yen, probably the two best ones, with I think the Swiss franc trade being even a better idea at this point, at least from my point of view. So yeah, there's that. there's there's something here too to be said with gold, right? The gold market and the yen market tend to be fairly closely, or pretty closely related. So before we look at like Aussie and CAD and Kiwi and stuff, why don't we take a quick look at the gold and silver charts. Okay. All right. Okay, so here's silver. Iman asking for a quick update on Aussie. Yeah, well, so I did put one out on Twitter, but this is what I'm looking at for the Australian dollar. And then we'll go a little more in depth after we look at some metals. But 1, 2, 3, 4. Okay. 1, 2, 3. This is a 4. 1, 2, 3, 4. Last move down 5. So in plain English, what I am looking at here for the Australian dollar is I think that we go and trade up into 76.20, and then you roll over and make a final low down near 74.90. Okay, and you can see that I put that out last night, but it has even more, I think, weight slash, what do you want to call it? Confidence behind it, if you will, simply because 2 legs up from this low down here would be 76.18. So, you've got a lot of stuff in the way there, right? Former support. So that's my opinion on Aussie here. Is that you trade up into 76.20 or so, roll over, make a final low down near 74.90. Okay, and then I'm looking for a big rally in the Australian dollar. Okay, let's move on to that gold chart real quickly. Okay, so this is silver. You remember back in October, this was actually October NFPs right here, right? And we were looking for a low in silver, primarily because of the slope, and then we got the huge reversal. Well, since then, gold and silver have both been in what I can really only describe probably as pure trading hell. I mean, literal trading hell, right? It hasn't gone anywhere. If you're bullish or bearish, it doesn't matter. You were probably like, what the hell is going on with the metals? I mean, this is disgusting. Now, here's the good thing. This makes for an absolute fantastic trending move once it resolves. And I do think it will be higher, okay, because of the upslope, because of all the bearish dollar evidence presented, right? That it would be awfully strange, unless I'm completely wrong on all this dollar stuff, but there's so much evidence there with the seasonals, the analogs that have continued to work, the positioning, and some of the, especially in yen and Swiss, which tend to be the ones that are most closely related to gold historically, right, and the metals in general. So, you have a big possible base here. Silver might go absolutely crazy on the upside. Once you get through, I would just put it as get through the 1117 high, okay? Get through that high, and I think silver is on its way to much higher levels. So I love the structure on silver. I love how it's kind of doing this basing thing down here. It actually kind of looks a lot like it did back in 2015, doesn't it? With all of this nasty kind of consolidation, right? This base that's going on down here. looks quite similar. Let's see if there is some similarity to it on a, you know, how long it's taken. It's actually pretty close, right? You can see kind of the ebb and flow. It says that we are more or less there for a breakout and for things to get wild. And you say, well, it's a Thanksgiving holiday tomorrow. It doesn't matter. I've seen some crazy moves over Thanksgiving, some big gaps. Obviously, it's only a U.S. holiday, so there's plenty of other markets, you know, around the world trading. It tends to be lighter during, you know, actual U.S. hours, of course, but on Thanksgiving. But that does not mean that the markets are immune to making moves, especially currencies, right? We've seen really big moves in the currencies around Thanksgiving before. All right, let's go to gold. Remember, GLD, the ETF, actually was cleaner in its construction. So I've been kind of looking at that, and this is a good sign. The median line right here that we had screwed around with and found support on the parallel 200-day average, we're back above it, and we've come down through it and touched it. Hopefully we can finally kiss this thing goodbye and just get going on the upside. You know, here for gold, right? So, you know, it's a constructive looking chart based on the slope, based on the dollar thoughts. We'll go to the CFD, obviously going to be somewhat similar. Go to an intraday chart, 4 hour. You can get up so see this channel here? Call this a running channel. If you break out through the top of it, right, this a lot of times is something that people look at as a bearish, just kind of a flag, right? They'll call it a flag or you know, a bearish channel, whatever. Well, that's true if you break down through the bottom of it. However, we haven't done that. We have turned up. This is a false breakout, right? I was looking for this to hold. It did not. We took a dump back in to frustrate everybody else, including myself. But now we're back testing that resistance. So if we can get up through this channel, what you'd be watching for is something like this, right? You can see we're right on it. Okay, so if we can get back through this thing, say you get a big surge, right? Take out this high over here at 1306. All right, let's say we get that. Okay, then your entry, your setup is to look for support down here. Okay, and then you see the market continue higher. Right, so it's simply support, resistance, you know, watching them, make sure that they, your breaking levels, your retesting levels, and that's confirming your behavior change. So to me, the way I'm looking at this is gold, silver are in, you know, they're in positive slopes, right? And they're responding to positive slopes. But the near-term picture has yet to offer, you know, a clean, you know, entry with, you know, with increased confidence. You know, an entry that you think is actually going to have a chance to play out. But this would be that entry if that happens. So if you get a push higher, a pullback, then look for that, you know, look for that hold, retest, and then higher. So this again speaks, I think, to the positive yen and Swiss developments, which are, of course, negative dollar Swiss, negative dollar yen. Okay. Let's go back to the commodity currencies real quickly. So we went through that Aussie chart, the short-term chart. If we look at the bigger picture chart, do I have that over here? I do not right now, so let's go make it. Okay. Get rid of you, get rid of you, get rid of you. And we will make this a log, or sorry, arithmetic chart. Aussie's actually charted better over the years on this long-term downtrend on linear rather than semi-log, for whatever reason. Okay, so you know this long-term downtrend, right? We've yet to find support on one of these, one of these former parallels here. So, this one right here, you can see off of course, this high right here. Maybe you get something down there. I wouldn't be too concerned with it, but it's just there, just so you know, in case you do break this. But really, my big concern is the trend line from 2016 actually it is 2016 because it's January and December of 2016. So if we can get down into there, that is the 74.90 level that we have on this chart, on the 4-hour chart, which intersects with your lower parallel, and it's right there, right? If we want to be real specific on this and try to say when it could happen or when it might happen, you're essentially looking at next week. Okay, so you're looking early next week. Monday, really, is when we would be looking at this intersection between the trend line from 2016 and the lower parallel. So obviously with Aussie, there's a couple trade ideas here. You do have the the short possibility into 76.20. If you wanted to take that or did that, I'd want to see probably like an hourly reversal or something. The risk is such that it might, you could just put an order to short 76.20 and leave a stop, say up above 76.65, which would be your high from a couple days ago. Let's see, what high would that be? Yeah, right here, 76.65 is this high, right? If you got back into that level, I'd be more likely to think that you actually have a low in place, right? Here's the Australian dollar, by the way, volume levels. It's certainly late in the game for the Australian dollar shorts. There's no doubt about that in my opinion, and I am generally dollar bearish, but that appears to be more information to be short dollars against European currencies at this point than the Australian dollar just yet. But those are just the two big spots, okay? It's a pretty clean short-term chart, really. Okay, looking at Kiwi. Kiwi's interesting. Not sure what to think here. Do have a pretty good response at support. All right, we did have a good short off of this level a couple weeks ago. Did get out at 68.70, I believe, was the exit. Yes, it was 68.70, and we've now. You see this parallel. This is simply the really long-term fork, and this magenta parallel at times pretty precise. Okay, big resistance back in April of 2015. Resistance on the initial run-up in July of last year. Since then, nothing of note. However, you bottomed on it on the 17th, right? And of course, what's also happened here is we've taken out the low from May. So when you do that, you take out the low, a big low like this, and then you turn up like we have. I'm always on the lookout for, or aware of the possibility of a big trap So in this case, a bear trap, and you can count something down like this, either 1 or A, 2 or B, 1, 2, 3, 4, 5. So even if this is an impulse lower, even if this is 1, 2, 3, you have the potential here for a fourth wave to carry back, at least back towards 70, right? And if it's ABC, then you're turning up and going a lot higher. I'm torn on the situation as far as whether or not we are really turning the corner or not. I don't have a strong opinion there. You know, if we look to other information like seasonality, Kiwi seasonality is actually pretty bullish heading into the end of the year. So, you know, I guess chalk that up to the positive side. COT is also fairly skewed in favor of, you can see here the short positions, right? The specs have gotten pretty darn short. You can see that, you know, this is, they've been this short. We've seen pretty good lows form, although not necessarily immediately, right? But it is there. They've been selling heavily. In fact, this might be the heaviest 4-week selling we've ever seen in Kiwi. It is not. You had heavier selling back here. That was in a big downtrend. That was in June of 2015. We were coming off that April top. You actually did have the next week a big recovery, but it was in the middle of a downtrend. So, you know, not a ton of confidence there in the COT stuff on Kiwi. Some markets are known as dominated by speculators, right? Natural gas is one of them, where the specs seem to be right all the time. All right, so Kiwi, if I look at the volume levels too, volume level down here, and you did turn the corner. So for me, if I'm looking at Kiwi to, you know, to trade it on, say, a bigger reversal attempt, right? If I'm of the mind that maybe that was actually a big trap on the downside, you know, what do I want to see? Well, I'd like to see us get back through this 20-day average at 68.80. You got resistance here at 60 or at 69. From this parallel here, you can see these highs up here. Throw this up here too, because that's going to be something to watch. And what I would want to see is I would really want to see the market find support back on the median line at some point, which was support for a time back in September, albeit on its way to lower levels. All right. So, you know, like gold, you know, be patient, allow for it to do its thing. It'll show you the way. You get up to 69, okay, fine. Maybe some resistance, maybe even resistance higher, right? But if we get weakness within this range, building a base, we want to see support on the median line here, okay? All right, dollar CAD, we'll look at DAX, as Vladimir had asked for both of those. Dollar CAD is cracking or trying to crack. I think the big trade in dollar CAD is on the short side, okay? I've thought that for a while. As you know, I've just been confused / unsure of where that comes from, right? For a while, I didn't know if we were going to go 28.60, 28.90, or even try to go for this 200-day average up here at 29, which is now 29.80, and right in line with the low from January, right? We are seeing the first cracks, I guess, though, of, you know, this move, because if we, let's zoom in a little bit. The trend line from September to October, which held support for a couple of weeks now, has actually been, you know, is giving way, right? Let's see how we end the day. But, you know, this is the first important behavior change, really. You did retrace a 618 here at 28.35, okay? 10 ticks over it, but close enough. Took out this high on 11.3. 27.65 is the weekly opening price right here. So essentially the underside of the trend line. that is where you'd want to see us, fail if we turned up from here. And it's possible to draw. Obviously, you've got 3 points to draw a slope, so you can draw this in. I would just start with trend line here and see if you can start trading on or around it, right? So if you get a pop tonight, later today, whenever, see if you can get resistance at 27.80. Still a work in progress, right? I do think that big trades down, unsure if it's done going up. I just, the confidence not there. It's not like Swiss francs. Okay, that's where my mind's at right now, is dollar Swiss on a trading basis. All right, let's take a look at the DAX. DAX awfully clean. Look at that. I think we called for a top near 13,190 in the update. And there we go. So you are starting to see DAX roll over. You could have a good short here. Obviously, looks like the top yesterday, actually during the U.S. session. But I'm bearish DAX from here. Let's throw on and see where we might get some extensions. So 100% and 1618. Okay. Looking down towards 12,524, and this 1618 would put you in line with the median line at some point, probably towards the end of January, early February is when the intersection is, and that actually is about 12,100. So you're looking at, what are we at right now, 13,000? You're looking at a 900-point decline. That's a 7% drop. Which would probably go hand in hand with a strengthening euro. All right. Okay. All right, so that's it for me today. Wishing you and yours a happy Thanksgiving, if that is something that you celebrate, if you're here in the States or celebrate it elsewhere. And yeah, some exciting times here coming up for the dollar. It looks like we've finally, turned for the next drop in the bucket, so to speak. All right. So thank you all. Always, thank you so much for your time. I will put out some orders before FOMC on Twitter, so just be aware of that. And we'll do it again next week, and they'll have the update out tonight. Not going to have one on Thursday. I will have one tonight. Probably just do some stuff on Euro because of ECB tomorrow, but other than that, not going to have one on Thursday night, obviously with Thanksgiving. So wishing you and your family and everything a wonderful Thanksgiving, and we'll talk to you next week, okay? All right, take care. Bye, guys.